In today's discussion, what we will do is let us study about investing secrets, or what are some smart secrets which can make a trade in favorable for us, right? A trade in favorable for us. Either you are an investor or you are a trader. What we are going to discuss now will be very, very important because India is the country where there is a lot of opportunities going forward, right? This particular decade or this particular the next 5 years, the next 10 years is the place where global investors are also eyeing on India. So we as either an investor or a trader, if you know certain rules, if you know the rules of the game, the chances of becoming successful is very high, right? So let me start sharing my screen and let's discuss on what are some key investing secrets, right? So today what we will do, we will look at what is the opportunity we have on one of the breakout idea. We'll discuss about how to successfully enter into stocks. Third, markets may fall, right? Markets may correct. That is the basic nature of how stock market works. So is it good or bad? We'll be discussing on that. And yes, we'll also discuss about position sizing. It's not about the profit you make in a single stock. It's all about the profit you make in an entire portfolio, right? So what exactly is position sizing and why do we need it? We'll discuss. And lastly, some of the golden words which you have to remember throughout your investing journey, we'll be discussing in today's discussion, right? First of all, sir, tell me one idea which is a confirmed breakout, or which is one investment where I can't go wrong or where I can't go bad. That idea is investing into India, right? If India is a stock, I would strongly suggest you have to be there with a long term view. The kind of a factors which are promoting or which are indicating that India is in the strongest bull run from many decades or even many years earlier is the time now, right? And if any one of you who feel, sir, Indian stock market has already moved really very high, I think this is the place where I will have a bearish position or where I will short the market. That's a wrong opinion, right? It's not about few days up or down, but for a particular period of time, maybe a 1 year, 3 years, 5 years, or even 10 years journey, this is the perfect place to be in. And as you master the art, as you master the skill, there are multiple opportunities, right? There are multiple opportunities in the stock called as India, right? Or the market which we call Indian stock market. Because the kind of a GDP growth we are in, right? The current market capitalization, if you see, or the kind of a economy which we are moving, we are at a $4 trillion economy. And any country which is in the journey of 3 trillion to $5 trillion, when it is moving in terms of its economy, it gave a multifolded returns in terms of its market capitalization, right? So what I would always say is either you are a short term investor or a long term investor, identifying good companies is the key. Sir, I'm making a good profit in short term, right? It's not about you just book the profit. Those profits, you have to invest into certain long term companies also, because our target price for the Indian economy will be around $5 to $7 trillion. It will be moving, right? And in this journey, the market capitalization also of Nifty from around 21,800 levels or closer to 22,000 levels now, Nifty would be easily doubling from those levels or even tripling from these levels of $4 trillion in economy, right? The math is very simple. When as a country GDP is increasing, there is a lot of traction which is happening, right? There are a lot of job opportunities. There is a lot of capital infusement. So in turn, companies will flourish, right? Companies will flourish. Now, second, sir, what are the checkpoints for a successful entry into stocks? First, remember, always your first position should not be an insignificant allocation or not significant, which means, sir, right now Indian market is at an all-time high, or even certain specific stocks are at a very high price. I'm little doubtful whether I can invest into the market or not, or that particular stock I can invest or not. The key is, whenever you're taking your first investment or when you're entering into a stock, initiate your investments with a not significant allocation to the stock, which means, sir, I have 5 lakhs to invest. Entire 5 lakhs, you should not keep it in all the stocks or in a one go. You should just park 1 lakh or a 1.5 lakhs. Divide your investments into 5 parts or 4 parts, right? You have to add in tranches, right? This is called as tranches or investing sequentially. You invest and you increase your position sizing. Treat your buying decision as a continuous process, constantly evaluating the price and probability equation, which means, sir, I have entered into a company at 200 rupees, which is its 52-week high. But yes, as the volumes are coming very good, right? There is a good number of buyers adding. And remember, if you see a particular chart, right, in your trading view, yes, a stock is moving like this. And whenever the volumes are coming significantly like this, right, or even continuous green bars at the bottom, which means buyers are entering, there are institutions who are interested into this stock. It can be FIAs, DIA, right? When institutionals are favoriting a specific company, that is the company we need to add also. So that's why our process should be a continuous process, right? It should be a continuous process where we add stocks like ITC, right? Stocks like HDFC Bank, or even any companies like Warren Beverages Limited, right? When the business is flourishing, and even VBL from couple of months or even years, when they are expanding in its volume, when they are acquiring a company and trying to increase their revenue, this is a continuous process. It's not that, okay, I've identified one company and I've invested it, and afterwards I'll be searching for various opportunities. Not required. The existing company which are already there, if there is a good opportunity, it's a continuous process. You should keep on increasing the number of positions in your portfolio, right? And if you feel, yes, this is the right position I have entered, and as the probability equation is favorable and your conviction is getting validated, which means, yes, the position which I have taken is good and it is also moving in my direction or of upward direction, always average up, right? One biggest mistake or one misnomer or one myth, sir, whenever the stock price is falling, I am getting at a wonderful price or I am getting at a cheap price, right? There is a difference between, right? There is a difference between a company correcting itself because of some significant problem in the market, or if a company is continuously falling and there are a lot of sellers coming, right? The volumes are increasing in terms of red bars, means something is bad in the business. And that kind of a stock, when you are averaging down, it is a trap you are entering, right? And a stock continuously falling with a lot of red bars is an indication, right? Is an indication that institutions are exiting out of the business or some insiders are exiting out of the business. So you decide whether you want to enter a company during its fall or you want to enter a stock during its strength, right? So I repeat this last point, which is very, very important. If you believe or if your conviction says, yes, I have entered at the right time and the stock is going in the right direction, it's going in the upward direction, always seize the opportunity and average up. Increase your investment value. You need not find hundreds of opportunities in the market. You just need few positions in your portfolio which you have the opportunity to keep on increasing. That's called as position sizing, right? That's called as position sizing, and one of the very, very important principle which we'll be discussing also, right? Now, sir, now we are closer to 22,000 levels of Nifty, right? So from here, if market is falling, is it good or bad, right? Is it good or bad? So now let me show you the chart of Nifty 50, right? Yeah, let me show you the chart of Nifty 50. So yes, we are at a very good levels. Even the last traded session, the market has opened up wonderfully well. It has again touched its lifetime high and closed flat, right? Closed flat. But yes, if you look at Gift Nifty, right? Yeah, Gift Nifty. Here also we see a very good movement of Nifty, and even on weekly scale, right? On weekly scale, it's in a good uptrend, right? It's in a good uptrend. And it's almost from last 8 weeks, market is in positive, right? Even if you see at your Nifty 50 or even Gift Nifty, it's in a clear upward zone. So now, as it is continuously moving, if there is a small correction or if the market is falling, is it a good indication or a bad indication, right? Always remember, for a very good bull run to start, a small correction or a consolidation is always healthy, right? A small correction is an important ingredient for the next bull run to start, right? For the next bull run to start. So yes, when the market fall or when the market is consolidating, which means market is in sideways, what are the pointers we need to remember? First thing, accept the fact that market is uncertain. Many people worry about market falling, but what I would say, things which are not in your control, you do not bother, right? Market falling, there is a geopolitical situation, Russia Ukraine, there is again a conflict happening, right? Israel Hamas, there is some incident happening, right? US inflation is increasing, because of that Fed has been increasing the rates, right? So that will create an impact globally. So these things are not in your control. And yes, market is uncertain. So things which are not in your control, you do not bother about it. But things which are in your control is risk management, which means when the external factors or when the market is uncertain, you should be prepared. What should be your action towards your portfolio, right? I repeat, things which are not in your control, do not bother about it. Factor in more about the things which are in your control, which is risk management. So you have to manage short term, long term, which kind of a positions you have to be in, right? That's it. And second, humans are instinctively afraid of uncertainty, right? The first thing which comes for many of the investors or even traders, when you see a certain uncertainty, the first thing you jump in is, yes, I have to liquidate my portfolio or I have to exit out of some positions. And I'll tell you a wonderful example which has happened recently in the market, right? In the market, if you see, last to last week on 20th of December, there was a fall in the market of close to 1.4 percentage. But if someone is only worried about a 1 day fall, and this uncertainty is creating fear, and if you're getting out of your positions, from there market has recovered wonderfully well, right? Which clearly signifies that we are in a very good uptrend, right? So what I meant is, 1 day of fall or 1 day of an uncertainty should not invite fear. Because why I'm discussing, humans are instinctively afraid of uncertainty. This is the first thing which comes to you, right? So see the overall demand in the market, the things how India is positioned, and look at opportunities. So what do you mean by opportunities? That is the time you need to explore any strong positions in the market. I always repeat, 96 percentage of the super performance, 96 percentage of the super performance in stock market investments arise during a bear market, right? When the market is bearish or when the market is falling, the stocks which are having strength are the stocks which are flat. Market is falling by 3%, market is falling by 2%, but a stock, specific certain companies are flat, they are not aggressively falling, or even they are building up strengths. These are the positions which moves much faster in the next bull run, right? So that's the opportunity or time for you to explore new opportunities. Yeah. So instead of limiting your ability, instead of not opening up your mind and observing that companies, look at opportunities, right? So if you consider uncertainty as an opportunity for growth, we can overcome our fear and embrace it, which means, yes, instead of worrying about more or getting into the fear zone, look at which positions or which sector is still holding up, and a careful analysis and the exact entry into it will lead a lot of super performance in the portfolio, right? And diversification is not only reducing risk, it's also a tool to increase exposure to various possibilities, right? Yes, this is a place where when the market is little bearish, right, use the opportunity to even diversify your portfolio, right? Use the opportunity to diversify your portfolio because it helps you in reducing risk and it will increase your exposure to various possibilities, right? So yes, I see this particular sector doing well, or with the overall fall in the market, some of the positions in my portfolio, they are still bleeding or they are continuously falling, or even in an upward market, these stocks are not moving at all. So that's an opportunity to move out of those positions and enter into a stronger sector. That's called as sector rotation. And lastly, if you overcome uncertainty, then you can access new opportunities and improve chances of success, right? So all of the members, even in the last week, who have used that opportunity to identify the stronger sectors or the stronger stocks during that fall would have been easily in a profit of minimum 10% and above in the last 10 days itself, right? So look at opportunities when the market is not looking good. Even right now, right? When the markets are at around 22,000 levels like that, yes, there may be a correction. If someone asks me, sir, is it a bull run? Will market move continuously above in the next couple of days? No. There will be a chances of a small correction or profit booking can happen. So whoever can observe stronger stocks or stronger sectors in that market, they are just picking up good ideas for the next bull run to start, which is always there in the market. And lastly, position sizing, right? I'll tell you a very important grid here. I want every one of you to remember this grid throughout your investing journey. And what do you exactly mean by position sizing? Sir, I've entered into a stock and I made 30% returns. Another person comes to me and says, sir, I've entered into a stock and I've made 20% profit in that position. So comparing these two people, A is better when we just look holistically because he made 30%. But if this person's position sizing means that stock in his overall portfolio, if it is only 2%, means in his overall portfolio, he has just invested 2% into a stock which has given 30% return. Whereas another person who has made 20% in a stock, whereas that position sizing in his overall portfolio is 5%. This person would have made wonderfully well than person A, right? So it's all about position sizing. If you had a good profit or if you are doing well in a particular stock and there is a lot of probability for the stock to go ahead or give you more returns, increase the position sizing, which means add more into that stock which is stronger, right? So this person, yes, have added 1%, it has moved, have added few more stocks, 3%, 4%, and gradually taken to 5%, right? So position sizing is very important, and this is the grid I want every one of you to remember. Yes, whenever a stock which you have selected, if this criteria is met, either it is right or wrong, always look at the other side of the equation, right? If this is your y-axis, your stock selection, your x-axis is position sizing. right? Let's say, sir, I have selected the right stock. I've entered into a good company, but I have not increased my position, right? Person A, we are speaking about person A, has identified a right stock, gave him 30 percentage returns, but position sizing wise have added only 2%. So what happened here? He has missed the opportunity of creating more wealth in his overall portfolio, right? So what did person B do? He has selected the right stock. Yes, his stock entry is good because he has made some 20 percentage, and yes, he is right in position sizing. He was able to add and take his position to around 5 percentage, right? This is where multi-baggers will come. And you don't need hundreds of multi-baggers, or you don't need some 10, 20 multi-baggers in your portfolio. You just need a few multi-baggers where you can increase the what? Position sizing, right? Position sizing. And the wonderful part of position sizing is, and yes, the reason I have mentioned why we need it, why we need to increase our position is, you may enter into wrong stocks. Sir, I have thought this company will do good, or my analysis have gone bad, right? It's fine, and that is a part of this game. Even Warren Buffett has a 34 percentage churn out ratio, means out of 100 stocks, 34 stocks he may choose wrong stocks, but it's about you exiting them as early as possible, which means, right, which means when your stock selection is wrong, do not do the mistake of position sizing, which means, sir, yes, the stock I've selected is wrong, it is going down, and I thought, or I got some suggestion, or my friend has suggested we need to add more. So the position sizing also I did an error. What is that error? I've added here, I've added another 100 stocks, I've added another 200 stocks. You have made an error even in position sizing, right? So stock selection is wrong, and your position sizing wise also you're averaging down or adding more. That can lead into big loss in your portfolio. What will happen there? It will lead to biggest losses, which will be very difficult to recover. Whereas, sir, I've entered a wrong stock. Yes, the stock selection is wrong, it is falling, but yes, I was right on the position sizing, which means I've added 100 stocks here, but as the stock has fallen down, I've not added any more positions, right? My stock selection is wrong, I've not added any more positions more, my position sizing is right. So at least you will be satisfied because you're not accumulating your losses. Always remember, compounding works in your favor. When you increase your positions during the uptrend, you win. When you add, or when you accumulate more losses, just to recover that loss, it will take a lot of time, and you need a lot of profits in the portfolio to just to break even if a position is continuously losing, right? So do not average down, rather average up. So this discussion, let me close with some wonderful thoughts which will help you going forward, right? These are certain things which I want you to remember throughout your journey. First, it's not about whether you are right or wrong, right? Sir, I always wanted to be 100% right in stock selection. You are just living in your dreamland, or in a wonderland which you believe that every stock you choose can be a multi-bagger. No, that cannot happen in market, because you think one market will teach you lessons, and that's the responsibility of market, right? So understand the basic thing. It's not about whether you are right or wrong, but it's all about when you are right, make it big, right? And when you are loose, or when you are losing, get out of it as early as possible, right? So it's not about whether you are right or wrong, but about how much you make when you are right, which means adding your winning positions, and how much you lose when you are wrong. The earlier grid we discussed, if you are wrong, don't increase the position sizing and try to get out of it as early as possible, right? When you are wrong, get out early. When you are right, add more. You have to get more profits there, right? And lastly, largest positions were not the ones I thought were absolutely the best, or that I was going to make the most money. Similarly, sizing all had to do with how much money could you lose, if you could not lose much money, you can take a very big position, which means, sir, I am very confident of a particular company, and this company will do well in the next 1 year, in the next 3 years. Whatever happens in that company, whether it is increasing or decreasing, I'll continuously add, right? Do not believe in that superstition. Rather, when the company is showing strength in its fundamentals and technicals and price volume, when the price wise it is increasing, more number of buyers are coming, more number of volume is coming, that's the levels where you need to add, right? And if you develop this habit of, when you are winning, add more, when you are losing, get out of it as early as possible, so that will teach you a mechanism wherein if you could not lose much money, you can make a very big position, right? So instead of adding more into the weaker stocks, or entering into a segment wherein you are in the spiral of averaging down, you inculcate the habit of averaging up. Buying a stock which is at a 52-week high means you are adding in strength, or you are adding in a segment where it is building up strength, right? Where it is building up strength, right? So all these lessons, if followed strictly, and if you inculcate these secrets, these smart secrets or the investment secrets, this will help you to identify some strong opportunities. And it's not only about the opportunities, adding more into the strength, and in weakness, you have a process not to add more and get out of it as early as possible, right? The golden mantra is, when you are winning, make it big. When you are losing, get out of that losing stocks ASAP, as soon as possible, right? So let me know below, what are the things from now onwards you will follow in your investment process, right? Sir, yes, these are the things I will strictly follow. Let me know below.